and welcome to the MUFG Global Markets FX Week Ahead podcast with Derek Halpenny, Head of Research, Global Markets EMEA and International Securities. It's Monday, September 13th, 2021, and joining Derek to pose some questions on the financial market themes for the week ahead is Michael Owen, MUFG's Head of Global Client Desk for EMEA in London. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Good morning, Derek. Looking at the week ahead, we have some inflation prints this week, and it's been a very fragile start to the week. There was a higher PPI print on Friday. Do you think this is a sign of things to come?
Yeah, definitely. The investors, I think, are going to be a lot more focused on inflation, supply constraint problems, global growth implications. The S&P 500 on Friday, that was the fifth consecutive decline. Admittedly, one of those declines was pretty modest, but nonetheless, technically, 5 consecutive declines. That's the first time since COVID first hit in March of last year. So percentage-wise, it's less alarming. 1.7% is the drop. That's the biggest decline since June. But nonetheless, going into this week, as you say, Michael, we've got important prints this week. Inflation from the US tomorrow is really the key one. The annual rate at the moment on a core basis is up 4.3%, but nearly 2 percentage points of that 4.3% increase are components that are, through the roof price-wise because of base effects and because of changes in consumption patterns because of COVID. So, used cars and trucks, rentals of used cars, airline fares, and lodgings away from home. Those 4 components alone account for 2 percentage points of that 4.3% increase. So I think what investors will want to see is not necessarily do we see a slight increase or a slight drop as expected in the annual rate, but what about the composition of inflation? And are we beginning to see those extraordinary increases start to reverse? And also, importantly, is services inflation going to start picking up? And that means the next couple of months, this balance between goods inflation coming down and services inflation possibly going up, it could mean we still have another couple of months of alarming inflation figures and maybe some further surprises to the upside. And that could obviously hit confidence. So CPI tomorrow is massively important. But it's not just in America. We've got UK inflation on Wednesday. We're going to see a big increase. The core going up from 1.8% probably to 3% is the expected there. Now, again, base effects from a year ago, very, very important here. We had the sales tax cut implemented for the hospitality sector a year ago. And also we had the Eat Out to help out. The scheme from the government to encourage people back into restaurants in the summer of last year. So those tax cuts is going to be a big base effect for the lift in the annual rate in the print that we get this week. So it will be alarming, but I think it's well expected. And the Bank of England's current inflation forecasts obviously also incorporate that. And then at the end of the week, we've got Eurozone CPI. And again, that's at 3% from the flash estimate. So elevated inflation there as well. So, a big week in terms of overall investor sentiment, in terms of how they interpret inflation, and it will set the scene going forward as well.
Excellent. I noticed there was a German TV debate over the weekend. Do you think that politics are going to start to drive the market?
Yeah, again, we've got a couple of key dates coming up. Actually, we've got a general election in Norway today, and that's, I guess, front and focus at the beginning of the week. There is a high chance, according to the polls, that we could have a change in government with a Labour-led coalition coming into power. I don't think that's going to have much implications for the Norwegian krona. If anything, at the margin, you could have a more left-leaning government, which is a bit less eager to fiscally consolidate going forward. So that could net have a marginal growth positive impact. There is also some uncertainty in relation to Europe. Some parties on the right are becoming more anti-Europe and are kind of promoting the idea of leaving the EEA. I don't think that becomes an issue. Wider support for such a move is not really there. So I don't think that's going to have much impact either. And, the Norwegian krone, based on our valuation metrics, is still undervalued. So I think in that sense, I wouldn't expect any negative implications from the election today on FX. And if anything, that there could be some slight positive impact. Then, as you said, Michael, we had the German TV debate yesterday, second of 3 debates. And Armin Laschet failed in terms of trying to shift the momentum in terms of the polls, in terms of who won the TV debate. It was definitely with Scholz and the SPD. And the polls, again, over the weekend, showing that he's and the SPD are maintaining their lead of about 6 percentage points over the CDU. So it is becoming more likely we're going to get a change in government as well in Germany. I think the only risks for the euro, given policy is not that different amongst the key parties in Germany, if we get a very, very tight election result and we have to go into a prolonged period of uncertainty as we await the formation of a coalition government, that then in itself could be a weak government, that might have some bearing on euro performance. But from a policy perspective, I certainly wouldn't expect much. And then finally, very quickly, we've got the LDP leadership election that's coming up on the 29th of September. We'll discuss that again in more detail, but we have 3 key candidates. The only thing I'd say at this point in time, the differences between Fumio Kishida, Taro Kono, and Sanae Takaichi is pretty marginal. They're all looking at fiscal stimulus, and the Japanese equity markets have been benefiting from that. But we're quite skeptical on that having any kind of meaningful impact in terms of FX. But again, that's further into September, so we can discuss that again.
I've been reading the FX Weekly on Friday, and your short Aussie Kiwi trade is going very well. Have you got any updated ideas for clients?
We're still holding that. I think it's pretty obvious in terms of the monetary policy divergence. We've got the RBNZ meeting coming up on the 6th of October. We see no reason why they won't move. And the RBA, if anything, are going to be more tentative. COVID is coming down in both countries, but I would be less convinced in terms of COVID being behind us in Australia than in New Zealand. So again, I think everything is still in place for the trade idea we have there. On top of that, we've decided to establish a short euro, long Russian ruble trade idea. Carry is important in that. So given what I said at the beginning, we need to be careful in terms of the potential for risk appetite deteriorating further. But even if it did, I think it would have to kind of deteriorate quite significantly for the ruble to underperform. We had a rate hike on Friday. Okay, less than expected, 25 basis points from the Russian central bank rather than the expected 50. But from a carry perspective, it's still very, very attractive. And if you look at the technical charts, 86 in euro ruble is a big level. Lows from August and June. And we're back at that level right now. Looks like we're just breaking below those levels. So technically, euro ruble to the downside looks pretty good. And given the carry attractiveness, we think there's potential for euro ruble to go lower from here. So that's a new trade view we put on Friday.
Thank you very much, Derek.
Thank you, Michael.
Thank you for listening to this MUFG Global Markets podcast. Rate, review and subscribe, and reach out to your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.